Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Friday, July 30th at 6 a.m. as I'm starting the video. As always, please run the video at 1.25x to increase your efficiency. Just a programming note, I've got a very early appointment today that I can't avoid. I need to be there by 7:45, so I'll be doing good to get this video out to you. No blog post, at least not early. I'm going to try to post some stuff after I get back. But just I want to get you going with some stuff today and give you some stuff to think about. Let's take a quick look at futures. ES is down 0.6. NASDAQ, of course, with the Amazon rug pull is down 1.15%. Small caps down 0.4, oil down 0.2, nat gas down 1.5%, copper is up 0.3, and gold is flat. This morning we've got the employment index, we've got personal income, Chicago PMI. I think importantly we've got James Bullard of the FOMC at 9 o'clock. I don't know exactly where he's going to be talking, but the last cycle, whether he does Bloomberg first or CNBC first, he's supposed to be on at 9 o'clock. Last time he was talking tough, and there was a pre-market sell-off that ultimately got bought, but we'll have to see if he comes out with a different tone, a different message. He seems to be the point man now for the first guy out of the gate after a meeting. And then we got Lael Brainerd this afternoon, who may give it a double whammy for whatever they've got to say. On the earnings front this morning, we've got ExxonMobil, Chevron, P&G, and Caterpillar. Those will give us good reads on energy and consumer staples, and then industrials with CAT. So I want to keep on this theme of trying to work in some trading wisdom. I think it's a good thing to just, start the day off with something that we can think about. And then, of course, this comes from Jesse Livermore, and let me set it up for you. So Jesse had two big commodity positions. He had a giant position in cotton, and he had a giant position in wheat. And let me read it for you. It seems incredible that knowing the game as well as I did, with experience of 12 to 14 years of speculating in stocks and commodities, I did precisely the wrong thing. The cotton showed me a loss and I kept it. The wheat showed me a profit and I sold it. Of all the speculative blunders, there are few greater than trying to average a losing game. Always sell what shows you a loss and keep what shows you a profit. That was so obvious, the wise thing to do, and so well known to me that even now I marvel at myself for doing the reverse. We've all been there. And I think what happens is when we've got two positions, one showing a profit and one showing a loss, when we go to sell a profit, I think it's often for validation of our ego to say that we were right. See, I'm ringing the register, 50% profit or 300% profit, and look at me, I'm closing out. And then for the ones that are the loss, we're hoping that it comes back so that we can say that we were right. So I think that's part of the psychology of why you would sell a winner and keep a loser. And this part here, trying to average a losing game, if you'll recall, that is a famous piece of paper that's hung up in Paul Tudor Jones's office back in the 70s or 80s when he was trading. losers average losers. When you're down on a position, usually not a good idea to add to it. So when you're faced with a decision of lightening up, you sell the losers. You don't sell the winners, because winners are performing and they're going to go higher, and losers are not performing, and most likely they're either going to go lower or not do what you want them to do. So that's a really good lesson to put in your trading arsenal. Okay, let's go through this really quick. Dollar was down. Dollar's falling. That's supportive of commodity prices. That's supportive of precious metals. We had 10-year Treasury yields tick up yesterday, but we're still within this down channel. For the cyclical trade to really ramp up, we need a breakout above 1.3%. Haven't got that yet. We saw TLT down a little bit, but still above our go, no-go line. Interesting happenings in the breadth. Here's our percentage of stocks over their 50. They had a nice jump yesterday. They went from basically 40 up to 48. And the thing that's interesting about that is the averages didn't do anything. So remember, in this particular metric, every stock is the same. Apple is no different than, an airline or something like that, stocks in the index. So under the surface, there were stocks that were gaining, even though the tape was rather benign. Nothing to see in our oscillators. They're right in the midpoint of the range. When they're in the midpoint of the range, there's no real actionable information to garner. One thing I found very interesting in our equal weight SPY is that we broke out. We had been watching this 152 area. We have peaked above the trading range from 146 to 152. We're at 153 now. And we've also nudged above this uptrend line where we had been trading below for quite a while. So that's another sign that things are inching better under the surface. So I was very pleased to see that breakout. Now moving on to SPY, 2 hour. Of course, this is pre-Amazon and all those stocks that went down. And you'll recall last night that, when Amazon dumped, Apple and Microsoft and Facebook and all those names, they all went down in sympathy. So it's not going to be just Amazon. It's going to be all those names that are going to go down. So, we're down 0.6 right now. So it may be more, it may be less, in 3.5 hours when the market's open. But what I've done here, since this is a 2-hour chart, I've brought over the daily EMAs for the 8 and the 20. Remember, those are our key fast-moving averages that if price drops below, we've got to get tactically defensive. Now today, most likely we're going to drop back into this rising channel, and really much below 440. I would be targeting 438 and probably 437. 438 is the 8 EMA. 437 is the midpoint of this channel. I think we'd be doing good to come down and hold that, tag it, and then find some support. If things get ugly, then the 20 comes in at 434, which is way down here. And then, at that point, you're probably looking at a tag of the lower part of the channel down here at 432. Here's the 30-minute chart. Really just giving you the same information except blown up. Here's your 436 down here, where you've got a trading range being carved out between 441.50 and 436.50, let's call it. And so what we definitely don't want to see is this trading range break to the downside, because then we're back in the 431s, 432s, and that would align with a check back to the bottom part of this channel. So those charts pretty much align. But if you're an active trader, you can use these levels here on the way down. And for those of you that are new and not quite familiar with the work, a sell signal comes, well, if I drew a trend line right here, you'd see that anything below that trend line would be a sell. But also if you've got a well-defined level, say here at 440, and price violates that level, that initiates a sell signal with your target the next level below, and then you set a stop just above, and then you may get a reaction. You may get a reaction as you head down. That's all experience of being a trader. How much momentum is behind the move? Do you start to see reversal candles at well-defined support levels? And then that would be a place to cover your shorts. Moving on to the Qs. Again, I've brought over the daily EMAs for reference. We're going to have a gap down this morning as a result of the FATMAAN names, moving down. I think a layer to hold is going to be this 362.50 area. And then you've got a layer just below at 361 that was just tagged the other day. But you lose 361, then you're coming back to 358, and then of course if you lose 358, then you're back here in the tag in the 50 again. So there's definitely some downside risk on the Qs this morning, depending on, is there follow-up selling in the FATMAAN names, or do they stabilize it and kind of hold it into the weekend? And speaking of the weekend, that's going to be very much important to watch that last 2 hours of trading today. Why? Because that's when you find out who really wants to be long. Who wants to be long into the weekend with the FATMAAN names. Or do they want to, let's take risk off. Let's pick up the ball on Monday and see how it goes. So that last 2 hours of trading is going to be really important. Here's the blow up on the 30-minute chart. Essentially have the same levels. And even though the opening setup will be bearish, right? We're going to have a gap down. That's bearish. Keep an open mind for a flash gap fill back up to the top to finish, to take care of unfinished business. Most gaps get filled. We just don't know when. So if we start down below, let's say we undercut and come down below 362 and then recapture it, and then recapture the bottom of the gap, that's a buy signal, a short-term buy signal, because it could be an indication that they're going to run up and fill that gap and then probably roll it back over again. So that's why these gap ups and gap downs are tricky, because you never know when they're going to do a flash run to the top. So just keep an open mind. And if you're not sure, the best policy is just to wait until you are sure. So have your game plan and your triggers in your notes so that when you see that happen, you'll be ready to go. I was very disappointed in IWM yesterday. We had a gap open, and then we had some very impulsive moves up into the 224 range, and then they dumped it into the close. Now, from a technical standpoint, what do we always say? Breakout, back test, and now you want to see that go. You do not want to see price come back down below 222.50 and fill this gap. That's certainly a possibility. I'm long. I don't want to see that. So, but I might not even be here for the open, so I'll have to adjust that when I come back. But a good long entry, if this were to fail, would be to buy a gap fill down here at what is that? 221. If this gap fills, I would be looking for a long there, with a tight stop below. And here's the 30-minute chart. Here's the gap. Here's all the intermediate levels. I think there's a rotation afoot, and I really like to see that breakout. And then, of course, like I just said, I want to see that hold here at 222. Going back, we've got the 50 in there. So if price can hold the 50, that's what it's there for. It's there for support. And if we can't hold the 50, then it looks like this breakout might have been fake. So we got to keep that in mind. Let's run through FATMAAN really, really fast. Facebook, we still have the gaps above and below. We went from this gap and we settled down on this gap. So there could be some very nice trades in Facebook here. If this gap fails, you can bring it down to 352. And if it gathers itself and there's a bullish impulse come up here, you break above 362, that's a buy going back up to the top. Apple was soggy. There's not a lot to talk about today. You got 147 as a level above to break that. You got 144 to the downside. That's a pivot. I think in this level here between 147 and 144 after this downdraft after earnings, I think this is a lot of noise. Now that's $3, and you're certainly welcome to try and trade that. But for longer term, you got to wait for a 147 breakout or a 144 breakdown. Tesla. Let me see here. Show you that 60-minute chart. Got a big impulsive move yesterday morning out of nowhere where it rocketed up, took out the 665 that we had pointed out, took out the uptrend line, broke above 670 and made a run towards 690. Very impulsive move, up 4.7%. So now on this little pullback, what you want to see if you're a bull is for 670 to hold. And as long as 670 holds, the door is open to 690. And if 690 can be taken out, you've got a little layer of resistance at 710. And then jumping over to the daily chart, actually that level is 720. You've got a $20 gap here that needs to get filled, and then you would be on your way towards 760. So you can see this 690 is really, really important. And kudos if you were buying down here at support, and or if you caught it early yesterday morning, you had a really, really nice day. Microsoft, this 286 286.50 is a clear pivot. I think it's trading below that now. Keep in mind you've got a gap down here below that needs to get filled. So if you get a downside impulse and there's not a big gap down on the open, you can get short with a stop above and then see how it reacts down at the gap. And if you get a gap fill and a move down to 280, that might be a place to cover up your short and look for some stability at 280, because that was a level that was support and resistance in the past back here. So there should be some responsive buyers there. Amazon, it's down quite a bit. I've penciled in this gap down to 33.50, and just remember our TA tenants. We had the big breakout and back test of the $600 wide consolidation, and now we're squarely way back down in the middle of it. There's a big gap above. On the downside, you've got the 200 coming in at 32.50. If you were wanting to get involved with Amazon, I'd be a buyer at the 200, all things being equal. And if it can't hold the 200 and you get stopped out, I would say it's going to 29.50 at the bottom of the box. That's the modus operandi of a breakout and then back into the range. You typically go to the bottom of the box, but we've got some solid support here at 32.50 with the 200 and the midpoint of this consolidation. Like I said, that should hold, but if it doesn't, I think you can count on 29.50. Google held up well. We're inside this gap, but as long as this 27.10 holds, I think you're fine. It may move down a little bit in sympathy with the rest of them. You'll just have to play these levels if you're actively trading it. Netflix didn't do anything, coming back down here to 5.15. That's got to hold, or it's coming back to 5.08. Taken as a whole, let's just take just a second here. Taken as a whole, I don't think FATMAAN is where it's at. I mean, Tesla's got some good stuff going on with that big impulsive move yesterday. Google had some good price action out of earnings, but the rest of them failed. Not failed on their earnings, but failed on their reaction. They're all down. Facebook's down, Apple's down, Microsoft's down, Amazon's down, Netflix is down. So, like we said, that's 24% of SPY and 40% of the Qs. It's going to be hard for the Qs to go up when 40% of your cap-weighted stocks are going down. So probably time to take a pause after that big run-up into earnings and let them stabilize. And if they buy them up, the bull market is if they just buy these up like it never happened, that'll be a giant clue in and of itself. One thing I was really, really encouraged about as a risk-on asset is semiconductors. We were down here at 247 just a couple days ago, and now we're threatening to break out above 262. Watch that line like a hawk. Watch that line like a hawk, because that's our super breakout level. We had 258 and then 262 right here is where price is at. And that has been these all proved to be fake. And so, had these not been here, I would say, breakout, game on, we're going higher. Of course, these put a seed of doubt in your mind of going, all in on semiconductors because of these rejections right here. So what I'd like to see is semis break above this 262 level, and then see if that breakout can hold. A lot of that move was supported by AMD. We talked about Livermore's axiom yesterday. Once you break par, you go. And so yesterday we had lined up that we wanted to alarm 98.50, which was it 98.50? Let me look here. Yeah, 98.50 was the prior all-time high, and we blew past that and made a run up to 106, and then they brought it back into the close. So I want to show you another chart as well. This is the weekly chart on AMD. 75 to 95 for, what is that? That's a year. 75 to 95 for a year, and now we've broken out. Where's the measured move? We've got a $20 wide trading range. So 20 on the 95 is 115. And that's going to be our first target on AMD on the weekly chart. Now, could we come back and back test 95 or 98? Sure. Happens all the time. We've seen it. Can this fail? Sure. But right now, this looks like a big breakout after a massive base. And remember, another one of our technical trading tenets, easier trading comes after hard trading. This is hard trading. Chopping back and forth, trying to get it right. We're going to break out, then we don't, then we lose $20, then we come back up. That's not particularly easy. Yesterday was easy. We caught the breakout, and then you just sit there. You just sit there because there is no chop. It's a big impulsive move. Now what I've done here is I've laid on the Fibonacci retracements, and so a 38% check back is 102.31. A 50% check back is 101.25. And then a 618 retracement is 100. So that's really all we've got to go on as far as trying to pick a reversal point, because there really hasn't been any trading up here. There's no structure to the left to go on. So today, I'll be watching for a reversal point. And we may not get it today because the market in tech may be so soggy that, that there's no buyers here, or they sell it off even more. So we got to watch that. Here's Texas Instruments. Here was the, Chris got whacked here, and he got so disgusted that he didn't buy it here. So, that's just poor trading, right? Breakout, back test, and then go. So I have 190.50 alarmed on Texas Instruments. Here's gold. We talked about gold breaking out. We got gold miners here just under the 200. What I want to see is the 200 taken out, and really then you've got a big level at 36. We're only 50 cents away. So, for me, what I'm going to do is I have 36 alarmed. And then if we get a breakout there, go for 39.50. I don't want to get involved right here and then get trapped below the 200 or get trapped below 36 for an inordinate period of time. There's been a lot of head fakes and chop and gold. I'd like to see it break out. I'd like to be on top of that trade. If we see a falling dollar continue, I think we will. So I have 36 alarmed on GDX. Now, let's see if I can find it here. Let's see if I can find what I was going to show you. Here it is. Here's a little rotation study of materials. If you look at the spider ETFs, we had marked a bunch of levels. We had marked cyclical levels. We had marked XLB. We had marked XLE. We had marked XLF. And we had marked XLI. Those are generally the cyclical type sectors. And you could also throw XLY in that because you've got hotels and all that kind of, travel and leisure in XLY. But here, what I did was I took a few industry groups and a few individual names, and how this works on a relative rotation. Here's the leading quadrant in green. Here's a weakening quadrant. Here's the lagging quadrant, and here's the improving quadrant. And I made mention yesterday that XLB has been breaking out for 2 days. We talked about steel. We talked about copper and aluminum and specialty chemicals and all that kind of stuff, along with the other material names. So we talked about energy. Here's what I want to show you. What's in the leading quadrant? Aluminum. I threw in some healthcare stuff, medical supplies. But let's look at the stuff in the improving quadrant, because these things normally go in a clockwise direction. So we got all these energy groups moving up towards improving. We've got in the improving quadrant, we've got Freeport, we've got U.S. banks, we've got specialty chemicals, we've got hotels, we've got commodity chemicals, we've got Southern Copper. And for these lagging ones, which are still basically in the energy sector, they're all moving up. So you would expect, if things progress, these will be in the improving quadrant the next time we check on it. Here's the thesis. I think we're in the early stages of a rotation back to cyclicals and value after these big tech names got whacked. Okay? And whether these aluminum, whether these material names are linked to the infrastructure package that supposedly is going to get passed, I have no idea. It doesn't matter. What matters is they're starting to lead the market. And the thing is, we could be entering an environment where the broad market averages are going down, but the cyclical and value names are ripping below the surface. And I want you to be ready for that. I'm going to do a lot more work on this over the weekend, so we're ready. Now, I took a small position in VALE, iron ore producer. Yesterday it looked like it was the wrong one because Rio and BHP in the same category did really, really well. and you know that I took a small position in Freeport. So I'm easing my way in. What I'd like to see is more confirmation from industrials and banks. I would certainly love to see interest rates kind of grind higher. That will be a supporting factor in the cyclical value trade. If interest rates go right back down, they'll probably pile back into tech if we do a nosedive. So in rates, which will make TLT go higher. But remember, if rates tick up, TLT will tick down. And once TLT breaks that uptrend line that we had focused on right here, once TLT, if and when it does, drops below, that's going to be a sell signal on TLT driven by higher rates. And I think then it's going to be game back on, and that's going to be part of fading the COVID fear, right? Everybody's worried about fear. And also, don't forget that CNN fear greed gauge is down at 25. You may see a broad expansion below the surface of the headline, index levels. And that's kind of what I'm looking for. We're early stages, though. I don't think it's time to go gonzo. I don't want to be the first one in. I want to be the guy that gets in when I know it's for real. And we've had a lot of head fakes, so I'm wary of that. So I've put, a tentative toe in the waters with VALE and Freeport. But I got my eye on materials and the rest of the cyclical names. And that's going to be maybe a tougher trade than the easy trades that we've had over the last 2 to 3, I'll just say 2 months, where we've been focused on FANG, and then you only got to focus on 6 names. That's a lot easier than trying to, do I want to get in hotels? Do I want to get in casinos? Do I want to get in materials names? Do I want to get in banks? You got a lot more names in that value cyclical arena than you do mega cap tech. So we're going to be put to the test on our stock picking ability, or choose to go with broad market ETFs like KRE. If we want to be in banks, don't try to pick that one. Just pick them all with KRE and see if we can get that to work. So I got to wrap it up here. I hope you found the information helpful. If you're new to the channel, hit the subscribe button and the alarm bell. A lot more coming your way. And if you want to go the extra mile, I think you'd do yourself a real benefit by going over in the show notes, getting the link to the website, dropping your email in there. It takes 5 seconds. Then you get everything that I publish midday, aftermarket, pre-market, over the weekend. Be nice, neat, and tidy right in your email box so you won't miss a thing. Longtime viewers, thank you so much for your support. Pass the link along to your community of other traders and social media places. I'd really appreciate it. You guys are really helping boost my viewership, and I appreciate it so much. So have a good day of trading. I will check back in once I get back from my appointment. Hopefully I'll make the opening bell, but if not, it'll be as fast as possible. So this has been Chris Buss with Traders Profit Compass. Have a good day of trading. Talk to you next.